Hi guys, it's Corey here with Royal LePage Northern Lights Realty, and today I'm doing an expert column with Bailey Coates. Bailey's with the Mortgage Center Elite. The Mortgage Center Elite is actually a newer company, so why don't you take a minute and just kind of tell us about your structure, who you work with, all that fun stuff, because you're local.
Yeah.
Okay.
Yeah. Thanks for having me today.
Yeah.
I've been a broker now, coming on 3 years in Cold Lake.
Okay.
But kind of some exciting changes in, I guess, the new year.
Right.
So my mom joined me from another bank in town, so she became a broker. So we're working together as a team.
Yep.
Under the Mortgage Center Elite, which is a new brokerage that I actually opened up with two of my other business partners.
Okay, and those other business partners are also mortgage brokers, so you can kind of pool your resources.
Yeah, yeah. So
Yeah.
the other two are located in the Edmonton area, but yeah, combined, we've been in the mortgage space for years,
Years and
years
years,
and years.
years
Yeah,
and years, yeah.
yeah,
Like you don't even want to say how much because you don't want to date their
yeah,
age, right? Yeah, but lots of experience, and Bailey and I have worked together on a multiple of deals, and I trust him, so I wanted to have him in today because I wanted to talk about rising interest rates. So we've seen sort of a shift in our interest rate market. This year, we've seen some substantial rate hikes compared to what people were getting last year. So I wanted to take a minute to kind of dig a little bit deeper and find out why and what we do moving forward. So let's start with the why. Like, why are the rates going up? What happened? Because they were so low last year. Like, I remember people were getting 1.7%, and now people are getting around that 3%. So what happened?
yeah. So I mean, we're coming to, the end of, I guess, COVID times.
Yeah.
Reopening, getting back to this whatever this new normal is. So yeah, I mean, a year ago we saw rates that were under 2%, and those days are gone in the fixed environment. So in the last month alone, rates have gone up by almost a full percentage.
Yeah.
We're actually looking at closer to 3.5% now if you're looking at a fixed.
Wow. For a 5 year,
For a
right?
5 year
Okay, yeah.
fixed. Yeah. So, and what fixed rates are based on is the 5 year fix is based on the bond market, and bond yields they've been going through the roof the last really 2 weeks, two
Okay.
to 3 weeks. So as a result, that causes fixed rates to go up. There's also lots of kind of uncertainty in the market around the whole situation in Ukraine, so that's
Okay.
causing a little bit of I guess, unprecedented times again. Um, so that's kind of the story with fixed rates. If we do talk a little bit about variable though, variable rates they're not the same what they're priced on. So variable rate is based on prime rate, which is set by the Bank of Canada.
Okay.
So at the beginning of March, we did see an increase. The Bank of Canada increased prime rate by 0.25%.
Yep.
But variable rates still continue to be very low. So
Okay.
we're looking at about prime minus 1% on a variable. Prime right now is 2.7%. So you're still below 2% on a variable. We're in the kind of 1.7,
So
1.8% range.
gonna go off a little bit here off topic, but I
Yeah.
do have a question about variables because people ask me all the time, and I actually just went into the bank with my brother-in-law and helped him do a renewal. So with a variable rate, like what are the risks associated with a variable?
Yeah, so the risk is that that rate is not guaranteed the entire 5 years. So what happens is you get assigned a rate, and right now it's a discount off of prime. So your rate is prime right now, prime minus something.
Okay.
So if prime rate goes up or down, your interest rate associated on that mortgage will actually change.
Okay.
We do anticipate that prime rate will go up. The Bank of Canada is looking at things right now like our record-breaking inflation
Yeah.
as a reason that I can assure you we're going to see those rates going up.
Yeah.
It's just how much are those rates going to go up, and it's likely going to be gradual, just because of the impact of when you're in a rising rate environment, the impact that would have on consumers if they increased rates too fast.
Well, and I didn't want to go off on topic again, but like I feel like probably Vancouver and Toronto are causing a lot of this too because of the fact that their markets are so high and they need to do something to kind of curb that.
Yes.
So they have to make Canada-wide adjustments, but they might not necessarily affect every single market too, right? So
Exactly.
so
Yeah.
with a variable rate, going back to that quickly,
Yep.
does your payment change or is it just how much you're paying off? Like how does that work?
Yeah, for sure. So it actually depends on the lender. So there is two different types of kind of variable rate mortgages. For example, some of the big banks have variables that are set. So that means it's set on whatever your rate is at the time you get the mortgage.
Okay.
So even if the rate changes, your payment doesn't necessarily change. On the back end, they basically just change what's being set to principal versus
Right.
interest.
Yeah, okay.
The only time it would change is if that variable rate skyrocketed so high that your regular payment doesn't actually even cover that.
Okay.
So
Okay.
they would have to change it. Whereas there are other lenders who have adjustable rate mortgages. With those mortgages,
Your payment
actual
would fluctuate.
would fluctuate
Okay.
as prime rate changes.
Yeah.
Uh, I don't really necessarily think one is better than the other. The important part really is just making sure that you're paying attention to what your rate is.
Yeah.
Also with a variable rate right now, if you are looking at a variable, just because the rate, I mean, it's half of what fixed is right now. Considering looking at if you go into a variable, setting your payment to what your fixed payment would have been anyways.
Yeah.
An extra payment.
Yeah.
And that kind of pads that payment so that you're
Right.
protected. If variables do go up, you're used to paying that payment anyways. So you're
Well,
kind of protecting yourself.
I have a feeling, just based on our notes, we're going to get into a little bit more about variables in the
Yeah.
future when we're talking about another topic here. So let's move on.
For sure.
So when it comes to this rate hike, like what are the projections? And I know you're not an economist, but I want your professional opinion on this. So what are the projections for rates moving into 2023?
Yeah, so I mean, we're continuing for fixed rates to continue to rise. I mean, variable too. We're in this rising rate environment, and like you said, they need to try to slow the markets in these bigger centers. Down east, things are just crazy. Homes selling way over asking
Yeah,
or
it's
list
ridiculous.
price.
Yeah.
Like it's getting a bit crazy.
Yeah.
So
Well, and I was talking to a girlfriend of mine who's a mortgage broker in Vancouver, and I asked her just on average, what is your average mortgage that you're actually approving right now? She said 1.5 million, like not even kidding you.
Yeah.
And I'm like, how are these people even paying for this? Because like I couldn't afford that. You can afford that. Like where is this money coming from? It's just astronomical. I said, how much is their mortgage payment a month? She said 5,000 to 6,000. Like,
Yeah.
can you even imagine that?
no.
So I mean, definitely something has to be done. It's just not necessarily has to be done in our market. That's the thing. So that leads to my next topic. So how do you think this will affect our market? So one thing that I've noticed is that this year we've seen a 8% increase. So in sales prices alone. So I'm not quite sure how interest rates are going to affect that. I suspect right now, because our economy is strong and because our our job market is really good, we have a low vacancy rate, that we'll see little impact because of the fact that our prices are still really, really low. But I'd kind of
Yeah.
like your opinion on that.
Yeah, kind of the same thing. I think kind of the industries that Cold Lake, military, oil and gas, we're still seeing things pick up. The jobs are there. I mean, the price of oil is up, so that's
Yeah.
good. So kind of hopefully a positive outcome there. So, and I think rising rates shouldn't have a huge impact here. Like they're hoping that they do
On the
those
larger
other large
centers.
centers.
Yeah,
Yeah.
exactly. And maybe even bringing down some of those prices in the larger centers is not such a bad thing, but we've already seen such a drop. Like I can't see it dropping our market anymore when we're already on the upswing, right?
Yeah,
So
exactly.
I know interest rates did kind of help us last year, but you still so is there still that rule where you have to qualify at the higher rate?
Yes.
So
That's another thing that's kind of important when you're looking at mortgage pre-approvals right now, actually, when you are shopping. So if you're, right now the qualifying rate's 5.25%,
Perfect.
or your contract rate plus 2%. It's whatever's lower. So if your contract rate, so that's the rate that you're actually getting on the mortgage, is higher than 3.25% right now, we would actually need to qualify you at a higher rate.
Okay.
So that's a little bit something to consider in a rising rate environment, because what you might have, been able to afford when we were using 5.25, versus if rates, say your contract rate is 3.5%, now we have to qualify you at 5.5%, 2% over that.
Right.
Your purchasing power might go down. I suspect likely to, they'll be making an announcement maybe to the qualifying rate changing in the coming months.
Yep.
Just because of that. We're seeing so many deals now with that. We're using the 2%.
Yeah.
Whereas, you know, it was definitely nicer before when we could qualify everyone using the exact same.
The 5.25, yeah.
One rate across the board.
I'm not gonna lie, I actually hate that rule.
Yeah.
You
it
know,
does.
like
It lowers-
I don't want people out spending outside their means. Like seen such a hit here over the past sort of 4 to 5 years
Yeah.
that I watched horrible things happen to really good people.
Yeah.
And something like that where it's like if the rates do rise, you know you can still afford your mortgage, right?
Yeah.
So I actually don't. I'm not a hater of that.
Yeah.
It makes people, because I mean back in 2014 we saw like crazy stuff, like people buying, like 19-year-old kids buying, you know, $600,000 houses,
Yeah.
right? Like, I mean, and based on the fact that they had a job making X dollars a year, but if you lose that job, how do you
Yeah.
pay for your house, right?
Exactly.
So
Yep. No. So it's good to have a little bit of padding.
a little padding, totally. Yeah. So, what is your advice for someone coming up for renewal in the next year? Because this I've seen on a couple occasions where, for example, my brother-in-law and I went into the bank and we renegotiated his mortgage because he was up for renewal. We knew rates were going to go up, so we did it quick. We did it within his 120 day or whatever,
Yeah.
right? And then about a week or two later, one of my colleagues, she went in and did the same thing, but rates had gone up in the meantime, and her rate that she got was a lot higher than what my brother-in-law got. So
Yeah.
what should people do? Like, should they be locking in now or as soon as they can, or should they wait it out and see if rates go down? Like, what do you recommend?
Yeah, so I mean, I don't really see fixed rates, you know, going down. If there is even a slight decrease, it's, you know, we're not going to see the rates we seen, you know, a year ago or 6 months ago.
Right.
Definitely, you know, your bank typically will contact you about 4, some even up to 6 months before you're up for renewal.
Yeah.
So, you know, best bet honestly is get the offer from them. Bring that offer to your mortgage broker and have your mortgage broker look them over. See, you know, your bank doesn't necessarily make you the best offer on a renewal.
Right.
See what's out there in the market. A mortgage broker can hold a rate for 4 months.
Okay.
So you are protected then if rates do go up.
Yep.
If your bank is making you, you know, a really good offer and your broker will be able to tell you that, then they might even just recommend, you know, yeah, those are good rates. You know, renew with your bank now.
Yeah.
This is kind of our advice. So
Well, you're in it for the long haul. Like, you're not going to have somebody switch over to you just to make one paycheck
Yeah,
when it's
no.
not the best decision for them, right? Like, it's the same with me
Exactly.
with selling a house. Like, it's, you know, we're talking about people's livelihoods here. So, yeah, I get that. And it's good to have a second opinion, honestly, right? So, it's good to have Bailey take a look at, even if you've got something with a big bank, he'll tell you straight out if it's a good deal or not, right?
Exactly.
So,
Yep, for
yeah. Now, so would you recommend a variable this year, or?
There's such a big spread between fixed and variables. So I mean, if you can ride out the low rate of the variable, you know, you're going to be saving about half of what a fixed is right now.
Yeah.
I mean, there is always that potential though that
It could go
that
up.
It could go up. So
Yeah.
That's really, you know, a case by case basis. Again, I like to have a discussion with
Okay.
each borrower and
Yeah.
you know, what are your goals? What are your plans with this house? What, you know, kind of what is your risk tolerance? It's almost like investing, right? Making
Yeah.
that decision.
Well, and that wasn't even on this list of topics, but after we've been talking, because I'm coming up for renewal next year in
Yeah.
in 2023, so I'm already thinking ahead, going, oh my God, rates are going up, and I think
Yeah.
I'm at like 3.85, but I've been told it's going to go higher than that. So you know, I'm kind of thinking, well, maybe I'll do a variable, right? So in my mind, I'm kind of figuring out what I'm going to do for my personal mortgage. Yeah.
Lots to think about.
Yeah, for sure. And then, you know, I've been told too, and this is something that is something for people to consider as well, that if you're going to go up, if your renewal comes up in the next, say, like year to 2 years, maybe it's not a bad idea to talk to Bailey
Yep.
to see if it makes sense for you to do a switch now while rates are still low, right?
Yep.
So that's another option for people as well. Then they can do it now, lock in, they know they're good for 5 years, and they can ride out this sort of rate fluctuation.
Yeah, absolutely. Yeah. So we take a look at, see, you know, what penalties they are and make that decision to see, is it actually worth it for you to.
Does it make sense?
Does
Yeah,
make sense. Yeah.
for
We
sure.
have tons of calculators and tools to.
Because you do have to
figure it out.
requalify. Like, it's not like just like, hey, we'll give you this because they gave you that, right?
Yeah,
So
exactly. There is a bit of a process, but yeah, we
Yeah.
try to make it as, you know, as smooth as possible.
Perfect. That's
Yeah.
good to know for sure. So I've had a couple questions about this year as well. So people who are selling their house this year, but their mortgage is coming up for renewal, what do they do if their house hasn't sold? Like, do you recommend them doing open? Because those rates are astronomical.
Mm-hmm.
Variable, what do you recommend and why?
Yeah, so probably, if you're trying to sell your house, your mortgage is up for renewal, so you've reached the end of that term and you need to renew now. Honestly, probably best to look at a variable rate mortgage.
Right.
And the reason I say that is because the prepayment charge on a variable compared to a fixed is calculated completely different.
Totally. Yeah.
So a variable is calculated as 3 months interest.
Okay.
So it's minimal in comparison to what you're going to pay on a fixed,
Yeah.
which is a big complex calculation called an interest rate differential.
Right.
They look at your current rate, compare it to what rates are available in the market at the time of your payout, and then it's a calculation based on the difference of the rates, and those prepayments can be in tens of thousands of
I've heard,
dollars.
yeah, especially with those no fringe mortgages and things like that,
Yeah.
no frills or whatever they were
Yeah,
called.
yeah.
Yeah, back there, they don't really offer those anymore, but I still
Yeah.
see and I still hear people talk about them when they're like, oh my gosh, my rate is whatever, right? So
Yeah.
that being said, if you're military, your posting message will cover any rate differentials. So you can usually just submit that to your bank and they should cover that through your through your BGRS package. So not to worry if you are military, but there are some people who are moving locally that I've actually come across this year and they've asked me for this advice, but I'm not a lender. I'm not a mortgage person. So normally I would refer them to Bailey or another, professional in the industry so that they can get the right advice, right? So
Yes. Sorry, one other thing on that topic.
Yeah.
To also mention, the other thing we might look at is if you're looking to sell and then buy again,
yeah.
talk to your mortgage broker because it may be a possibility still put you into a fix till you're locked in. But we want to look at options for porting
Right.
that mortgage.
Yeah.
So make sure that you're able to port that mortgage to your new property. If there's going to be any implications with that, there's any restrictions, things like that.
Okay.
Because they do vary by lender, but
Yeah.
definitely a mortgage broker would be able to, tell you the answers
If
and
you
do
can
the
port,
research.
yeah.
For,
So when
finding
you
the best
port,
rate.
does it automatically port your CMHC fee as well, or do you have to let your mortgage person know I want my CMHC ported?
So that's something that we would look into. It really depends because if you're to port CMHC or Sagen your default insurance premiums over, your remaining amortization has to be staying the same,
Oh, okay.
as well as the mortgage amount would have to stay the same for you to not pay anything. So if you're going to be increasing your amortization back up to a higher period,
Yeah.
there's new funds
Which
on
most
that
people are
mortgage,
going
which
to
most
be.
people
Yeah.
are. You're going to have a top-up premium. So there's
Okay.
still going to be a premium. So that's something your mortgage broker would do the math on and figure out what's the best option.
This is why we pay the big bucks. Yeah. See, when it comes to numbers and things like that, like I'm great with the houses, the sales, the negotiations, all that
Yeah.
stuff, but it truly like when you want to deal with the bank, you've got questions about lending, you got questions about your mortgage, you need to contact these guys because
Yeah.
they will be able to give you so much information. I just can't give it to you because I can't stay on top of it. I have to stay on top of real estate, right?
Yeah,
So
for sure.
yeah, so that being said, I'm going to close this off because we're about 20 minutes in, but I just wanted to thank you so much for coming out, and I really appreciate it, giving me some valuable info and the consumer valuable info, and thanks again.
Yeah, thanks for having me.
All right, see you guys later.